Joining us now is Susquehanna's co-head of derivative strategy, Chris Murphy. Chris, how would you say this positioning compares to prior quarters for Nvidia?
Well, it's one of the most actively traded earnings you're ever going to see. So there's a little bit of everything. If we were to pull out one trend, it would be selling puts on the downside. The downside's a little bit offered. So what that's telling you, as you can obviously look at the chart on the screen, some people have missed the Nvidia rally. They are willing to buy on a dip, and one way to represent that is to sell puts on the downside. So like I said, you see a little bit of everything in something that trades as much as Nvidia, but that would be one trend that I could pull out leading into this earnings.
How do investors typically utilize options here? Is this something where they hold exposure to the shares themselves and then use options to hedge? Or is it fair to kind of read this as a directional bet per se? Or is it more of a kind of piece of an overall portfolio construction looking at Nvidia?
Piece of the overall construction, I would say that it's a great situation for options liquidity when you have something that trades as actively as Nvidia. You have call buyers on the upside looking for continued momentum. You have those who are long looking to take advantage of that 9% move by overwriting. They're offsetting to a degree. You do have some hedging, a little bit overwhelmed on the downside, a little bit overwhelmed by those who are selling downside puts that are willing to buy dip. So, because Nvidia is so actively traded, you can use the options market not just to pull out that 9% implied move, but you can also pull out the probability of, let's say an up 20% move versus a down 20% move. And kind of what you mentioned is the options market is pricing in higher chance of an up 20% move than a down 20% move, mostly in response to the trading flow that I mentioned.
The stock is up, Chris, 40% since the August the 5th low. Obviously, that's a striking move for most normal stocks. Is it that striking for Nvidia? And when it's come off the back of such a quick surge, does it change how you look at things and change the action that we're seeing?
Yeah, when we're able to have an opportunity where we think we can recommend volatility at a fair level in a name like Nvidia that moves around a ton. Once again, you can point to, yeah, sure, it's a 9% implied move. But if you look back at the last couple of earnings, you have a up 24% move a little more than a year ago. So if we see sharp moves like these and, the general trend since the August low was selling volatility in aggregate across everything. So, when we think volatility is coming back more towards a fair level, we're biased to recommend going long, especially when you get, the 24% move one out of every couple earnings.
That's a good point. And with Nvidia at 6% of the S&P 500, even if you miss the rally or you don't have exposure to Nvidia, this impacts the market in a very big way. Thank you, Chris. Appreciate your perspective.